Hello and welcome to Car Dealer Live. My name is James Batchelor and thank you very much for joining us for these live broadcasts on the Car Dealer Magazine YouTube channel. Now today is a little bit different as it's a big day for the month, New Car Registrations Day, and we're going to be talking about them live right now. Now, joining us for this special show is the chairman of ASE Global, Mike Jones. We're going to be talking about new car registrations in a second. Mike is also going to be giving us an exclusive preview of dealer profitability in July. And we're going to be talking a little bit about the Car Dealer Top 100 in association with ASE Global and sponsored by G-Forces. Now, hello, Mike.
Good morning.
Now, big day for the industry. Obviously, new car registrations. What are you seeing at the moment?
Yeah, I mean, the numbers have just dropped on the SMMT website, and it's a good news picture. To be fair, it reflects what we've all seen as we've gone through the month. Actually, a lot of the activity post-lockdown, and there is some pent-up demand there. We've got just under 175,000 cars done in the month of July, which is up just over 11%, and it's nice to break the series of drops that we've seen. We might actually see some better news stories in the mainstream press, which can help with sort of customer sentiment, general demand, to help feed it through. Looking in detail at the numbers, it's interesting to see the rise in retail. All of the growth really is in retail sales, which again reflects this pent-up demand from customers as we've gone through the lockdown period, now slowly being released as we get into July and then further forwards.
Yeah. So as a bit of a recap for people just tuning in, the July market is up 11.3%. To 100 and we're just under 175,000 vehicles, but overall registrations are down 41.9% year to date. It's expected to be 30% down by the end of the year, totaling £20 billion in lost sales, according to the SMMT. Mike, presumably, it's not unexpected, really. There has been this decline in diesel again, really. But also a growth in battery electric vehicles. Well, actually, diesels have actually grown by 0.3%, but really we could just say that it's flatlined, really. But a big growth in terms of alternatively fueled vehicles as well.
Yeah, I mean, just looking at the table now, diesel's actually on the month down just under 26%. Petrol's flatlined, and then the BEVs, the PHEVs, and all the rest of the EVs that we have in there have shown significant growth, and that's really what we're going to see as a theme over the next few years as we get the consistent launch of new vehicles from all the brands. We're going to see more EV derivatives drop into the market, replacing that petrol and diesel. I mean, at the moment, people are effectively registering and selling what they've got. And we're going to see a slow and steady drip feed of increasing numbers of electric vehicles, albeit that the brands, as we've seen across the whole of Europe, are regulating the number of electric vehicles that they're releasing into the market, making sure that they hit their CO2 targets for this year, but also saving up some pent-up demand for next year to help them get a fast start. I mean, overall on the July number, it's clearly a good news story, and we should be celebrating that. But July is not the biggest month. As we look forward, last year it made up just over half of the number of total registrations that we did in September. So clearly, it's a good story that we're there, and there were some really sort of significant increases among some of the brands from a registration point of view. But we do need to make sure that we build that pipeline for September, because that's the most important month as we go through the remainder of this year.
Yeah, exactly. Because of course, as we're well into August now, car dealers are going to be frantically trying to get things ready for September. This is probably going to be the most important September for a very long time, isn't it?
Yeah, absolutely. We've got a lot of demand, a lot of sales to catch up. Harking back, we shut down with a week and a bit to go of the busiest month of the year. We then had a couple of months where we weren't really doing any significant number of vehicles, and we need to start catching that up in order to hit the the annual target that you were talking about earlier. I mean, anecdotally, chatting to dealers yesterday, and I spoke to quite a few, the order book's okay for September. I mean, it's where we would expect it to be. Some of the brands are relatively optimistic or aggressive in their numbers, and they're going to be pushing to make sure that they hit those numbers. So it looks okay at the moment. What happens as we now start to come off the furlough scheme, as we now start to see the increased number of people hitting the unemployment statistics, that will impact, but maybe not until Q4. So September at the moment, as I said, anecdotally is building well, and consumers are very much still reticent to travel on public transport, reticent to get out there and want to buy new or used cars. I mean, used cars is as good as we've seen it.
Yeah. I mean, on the news this morning, there was Andy Barrett again calling for some kind of incentive for the new car market. You know, his view is that Europe is the UK is the only big major economy in Europe that hasn't installed some kind of incentive scheme for new cars. With what you're just saying there, I mean, perhaps the government is thinking, well, perhaps we don't need to incentivize people to go and buy a new car. You know, looking at the good news story today of sales up, registration up 11% in July, perhaps we don't need to be incentivizing people to buy new cars.
Yeah, I mean, and I think sort of reading into it as you look across Europe, and you know, he's right. Most of the other markets have introduced some form of a scheme, a scrappage derivative, albeit that I think it's difficult for the UK government to introduce that sort of a scheme whilst also backing the green agenda and driving UK manufacturing, because the cars they would want to incentivize aren't really made here, and so that they don't get the trickle down effect of that, the next level of that flow through of the cash. It goes immediately overseas, and so I think, you know, the industry's been calling for a scheme similar to the one that we had last time, and I think the government potentially struggles to hit that with their green agenda and what they're looking to push forward from that point of view. I mean, one thing on the statistics, and it does really, I mean, the government won't get into this level, but it does show the sort of strength of that 11% growth that we've had. The number of last day registrations was actually down year on year. Slightly, so we've beaten last year's number by over 10%, even though we did a few fewer registrations on the last day. So you know, it is a genuine good news story and a genuine number.
Yeah. Well, that leads me on to my next question, really, which was about pre-reg, because of course that has been an enormous driving force within our industry for the past few years. And I was just wondering whether 2020 is going to be the year where pre-reg is either going to increase or it's going to decrease. And what you've just said there, that perhaps we may be sort of saying goodbye to the days of a mass dump of registrations on the last day of the month.
Yeah, I think it would be optimistic to think that we're saying goodbye to it. There was still a large number of vehicles done on the last day. Now, some of that is tactical. Some of that is within the within the target system that we have, and we're always going to have a certain level of that. It is pleasing to see the number go down. I mean, we all know within the industry that the volume of those vehicles is way in excess of the number that's actually produced on the SMMT website. And it does change the market, but at this particular moment in time, I mean, you know, pre-reg aren't inherently bad. Pre-reg done in desperation are bad, because then that's a problem. But with the strength that we've got in the used car market at the moment, and people wanting to get into a car as soon as possible, there's actually the opportunity out there for dealers to move customers into cars quickly, and get these physical units onto customers' drives. It's the physical units that stick around at dealerships for months that cause everybody a problem in the system.
Yeah. Just one other thing about a possible incentive program. Is another reason why the UK is possibly reluctant to install one, is the fact that if there was an incentive program, there'd be pressure to actually put that to onto electric cars. And the fact of the matter is that for a lot of people in the UK, an electric car is still not a viable option for them. So perhaps we'd be pushing people into a car that's not right for them. Whereas in Europe, as we know, France and in Germany, it's a different story there, isn't it?
I mean, as we move through to the transition to electric, we've got a big education process to go through with the customer. And with some of the range that we have now out of the electric vehicles, it's perfectly viable for most people nearly all the time. And particularly at the moment when people aren't necessarily traveling as much as they did historically. But we need to work with the consumers and help them understand how they do live with an electric vehicle. And that, I mean, I've been sort of banging on at this for a while, and I think it's a real opportunity for dealers to build the trust level with the customer and really help them on this this move. The bigger issue I would see, if as we move forward, is making sure we've got the physical infrastructure there. I've got several friends and with electric vehicles who struggle to charge them as they travel around the country. So you can plan your route to do it, but you need the charging infrastructure to work as well. I mean, it's a route we're going down. It's actually, I think it's very exciting, and it's going to promote a huge amount of change, and people are going to be changing their vehicle, which is clearly good for the for motor retailers. But the dealers do need to help customers on that journey, because it is going to be different.
Yeah. And whether, if an incentive program does come along, it needs to be, a complete cycle, which is not only do you get a discount or some kind of incentive to buy an electric car, but you also get a hefty discount off a wall box charger, perhaps some subscription models, all of those things that help people transition to an electric car. Because as we know, a lot of people are put off by the extra things they have to do in order to get into an electric car. Once they've done it, they love them. A lot of people say, well, why didn't we buy an electric car before now? So it's got to be a package that's in the round, not just a discount at the dealer for the electric car.
Yeah, absolutely. And I mean, I know that Carlos Tavares was talking and saying that the industry needs to move to be able to produce these cars without any level of government subsidy. And he was very much looking at where they were cutting the costs in order to be able to do that in the medium term. Because we're talking about having an enhanced subsidy above the level that's already there. The future clearly further on down the line has to be that we can produce these cars for the same price as we can a petrol or a diesel vehicle.
Yeah. Okay, so that's the new car registrations story for today, up 11%. It's a good news story, but there's a lot more which could happen in the next few months. So let's move on now to dealer profitability. Now you've got some. Well, you're going to be publishing the results later this week. You're going to give us a bit of an exclusive preview on the show now. So let's talk about that. So what have you found?
Yeah, I mean, it's been a challenging time for retailers as we've gone through Q2. Absolutely, most businesses were largely closed with lots and lots of people on furlough, and as a result, I've not been throwing out the statistics with the same regularity, because there's been a much smaller sample amongst the people who were still submitting, and some brands only required the submission for the whole quarter, and some people haven't even finished for published the Q2 numbers yet, but it's the right time to go out. I mean, on a general basis, the rolling 12 figure for motor retailers is a marginal profit. It's a profit of just over £12,000. It's a return on sales of 0.07%, basically nothing over a 12-month period. I mean, to show the sort of the picture and the way that it's really hit us in the first quarter. In the first half, we've made in total a 25 grand loss. Now that really is the time when people usually make their profit for the year, bolstered by March, with a big profit kicked in by March. And we've seen on average about 125 grand loss in the second quarter as we've gone through that lockdown period, albeit most people actually made more money in June than they did in the same June of last year, reflecting the strength of particularly used cars and after sales as we went through that month.
Yeah. So potentially there's going to be some tough decisions ahead for dealers if they're having to handle these kinds of losses, really.
Yeah, I mean, at the moment they're in catch-up mode, and they need to be concentrating on getting as much business through. There's opportunities in all areas of the business. We've got some pent-up demand in after sales where people weren't getting their car serviced. Clearly, we've got the big backlog of MOTs that we need to get through as well. So we need to be trying to get extra hours in the service department and get enhanced profitability there. Used cars has been brilliant for the last couple of months. Really, really strong performance that is continuing. As we see when we look at the auction prices. I mean, I see it by looking at the financial results where we've got average profit per units up quite significantly compared to where we would normally sit, and people normally, if you sit on a whole load of used car stock for 3 months, as most businesses did, you'd expect a significant write down as a result. They've been able to get out of them with the book effectively standing still, and actually now moving forward to people are short of stock. And then new cars, we've got a job to do to, as we talked about earlier on, to hit that September number. So most people at the moment are concentrating on delivering as much profit as they can and trying to get out of the year at a break even to slight profit. I mean, I think most businesses will be showing that first half loss and then looking to claw it back in the second half of the year. But no, there are absolutely some tough decisions to be made, and I've been working with a number of businesses around what their structure looks like going forwards, not only in the number of physical locations that they've got. How do they run their dealerships in a sort of a market area to cope with changing customer demands, changing customer practices as we move increasingly digitally, and the volume of vehicles that they've got, but also looking at the number of staff we need. I mean, as we went through lockdown, I think that, I was very much an advocate of people keeping on the call center staff and a skeleton sales staff, and I think many businesses were surprised how much work and how many sales they could actually get done with a really reduced number of people, and people and businesses are definitely taking those learnings forward. So I think there will be some tough decisions on letting people go as we move through the next couple of months, if that customer demand wave doesn't really continue and drive forwards.
I suppose a big sort of problem for big franchise dealers at the moment is where they focus on. Or do they focus on used cars, which over the last few months have been, flying out of forecourts, and there's been difficulty in replacing stock. But also now that balance is starting to equal out with new cars. Where do the big franchise dealers actually focus, really?
They need to focus on both. And that's a challenge, and it's always a challenge. They will always have the manufacturer pushing them to focus on new cars, or making sure that they're focused on new cars and hitting their numbers from a new car point of view. The focus from used cars needs to come internally, and they need to drive that forwards. But it's such a massive profit area for the business at the moment and moving forwards that they absolutely need to make sure that they're focused on it, and that they are helping people get their mobility solutions as we move forwards. I mean, from a megatrend point of view, I think the sort of shared ride economy will have taken a hit as a result of COVID. People want individual mobility. I mean, it was already struggling a bit even before COVID with some of the brands who'd invested sort of pulling back, etc. But customers are out there looking for their own cars, and whether they can afford a new car or a used car, dealers need to make sure that they're maximizing all of those opportunities. Yeah.
And it's quite interesting, really, when you think that as this new normal of high used car sales. Yes, it is going to possibly dip a little bit or soften in September and in the months following that, but they're still going to be high because people will still want to be buying used cars. There will still be concerns about public transport, and of course, not everybody wants to buy a brand new car at this present moment in time. So perhaps they're looking at the used market, and that's still going to remain strong, isn't it?
Yeah, absolutely. I mean, all across the globe, as we've come out of the crisis, we've seen a real strength in the cheaper used cars, the more sort of run around area, and that then underpins the sort of the whole market above it. But we've seen that everywhere, and the UK is absolutely no different. And we were sort of predicting, or I was predicting that it was going to happen, and absolutely it has. And I foresee it continue as more and more people get back to work. particularly as the schools go back in September, which they seem hell-bent on making sure that can happen almost with everything else going by the wayside. As more people get back into work once the kids are at school, I would see that demand continuing. So whilst dealers would normally make sure that they focus on having a stunning new car month of September, there are going to be huge used car opportunities there. And the franchise retailers need to make sure that all those opportunities don't end up in the sort of independent world.
Yeah, yeah. Well, let's just talk about the Car Dealer Top 100. Now, for people who perhaps missed the news, but we have launched a Car Dealer Top 100. It's a brand new assessment of the most successful dealers in the UK, compiled by us at Car Dealer in association with ASE Global and sponsored by G-Forces. Now, Mike, what's different about this? Why should people be excited about it? And importantly, why are you excited about being involved?
There are a couple of different things that we're bringing into the mix. The first is it's going to be ranked based on profit. The trade is permanently ranked at the moment based on turnover, and turnover isn't everything in this industry. I think it's going to be really, really interesting to combine the non-franchise retailers with the franchise retailers, and people can start seeing where the most money in the industry is being made. We've seen franchise retailers move into non-franchise businesses, either their own or obviously we had Sytner's acquisitions as well. And it's going to be great to put those together and see how the whole industry performs. As we move further forwards and we move to more of an agency new car model, franchise retailers are going to have to get better and bigger at used cars in order to be able to balance the books. And so I think now's the right time to blend the two together, look at who's making the most money, and then we can see the league tables come out.
Yeah, yeah. And really, we're urging people to suppliers with their accounts get involved, because this parity between independents and franchisees has never happened before, and it's going to give us an exclusive look at the marketplace, at the trade, and I'm incredibly excited about it. I think it's got the potential to be a really big eye opener. Do you think there are going to be any big surprises? Do you think, perhaps in the top 10 of the top 100, we could see some surprises?
Oh, I think we'll absolutely see some surprises. I think some of the people that we normally see in the top 10 rankings amongst automotive retailers will absolutely not be there and not be in the top 10. And it'll be interesting when we to dissect it, look at franchises, the franchise mix that's up there, or whether it's non-franchised. I would expect some of the non-franchise retailers to be pushing in to the higher echelons, which they wouldn't necessarily do from a turnover point of view. So it's really exciting to see where people should be investing their money. I mean, we're going to see more change over the course of the next 5-10 years than we've ever seen. The way that we retail new vehicles is going to change fundamentally, and people need to be making the decisions as to where they invest their money, where they grow, and this sort of ranking and assessment of retailers will totally help people do that.
Yeah, yeah. I mean, you make a good point there, because there will be, many dealers out there who are diverting or investing a lot in digital systems at the moment, and perhaps, obviously that's going to be affecting their bottom line. Whereas there are going to be other dealers who are not, doing similar kinds of investments, and comparatively, their bottom lines are going to look better. So it's going to be interesting to see the dealers who are investing and taking a bit of a hit in the here and now to shore up their business in the future, and the dealers who perhaps aren't thinking along the same lines.
Yeah, I mean, the numbers that we're taking are last year's numbers as well. So it's all pre-COVID. It was almost this. This was the situation before. We'll then see, obviously, in the subsequent years, what happened during the COVID period, and then who's emerged out the other side. But I think the retailers, whether they're franchised or non-franchised, who can deal with the new consumer in the way that they want to be dealt with in this sort of omni-channel world, but true omni-channel. We've been talking about it for years, but the customer wants to move backwards and forwards. The customer is very individual now in what they want to do and how comfortable they feel and how they want to be sold to. The people who master that will absolutely be at the top of the tables as we move forwards.
Yeah, yeah. Fantastic, Mike. Thank you. Just as a bit of a roundup of people who may be just joining, new car registrations are up in July, 11.3% to just under 175,000 vehicles. Full dealer profitability results will be announced later this week. What day is it, Mike? Is it Thursday?
Yeah, no, I'm pushing them. Yeah, they're going out tomorrow.
Going out tomorrow. Fantastic. So we'll be reporting properly on that tomorrow. And a call to action, do get involved with the Car Dealer Top 100. It's something you really do not want to miss. Again, thank you very much, Mike, for coming on at this pretty early hour. And until next time on Car Dealer Live, thank you very much for watching, and bye-bye.
Thank you.